Hey everyone, as mentioned on the Daily Financial News, we are starting our expert series and we always start strong on Mondays with Mr. Greg Dickerson. How you doing, sir?
Good, Michael. How are you?
Showing the guns, huh? There's
Flexing.
I
Start
like
strong, finish strong, man. I hit the gym there first thing every morning, and first of the week I hit this with you, and man, it just sets the tone.
I love it. I love it. Well, let's keep that theme going and let's talk about a topic that is dominating the press, at least the financial press. It is something that I really haven't considered a lot over the 20 years of investing, but I think it's something we have to consider. It was certainly around in the 70s and 80s, and that is the dreaded word of inflation. So I'm wondering where you come down on that. Do you see inflation kind of near, short term, medium term? Where do you think that? And then we'll go into that a little bit deeper.
So, what is that?
Yeah, what is inflation? We've never seen it.
Yeah, it has been a long time, and we're seeing it on a normal minor level. So inflation generally at the consumer level is obviously goods and services, exponentially increasing over a short period of time. And what we have right now in the economy is we have asset inflation. So all assets are way overly inflated, all of them. I mean, real estate's probably spiked 30% or more in some markets, in the last year.
Yeah.
And it's really incredible. And, housing and real estate, and vehicles, things like that. If you look at those types of things, I mean, vehicles are astronomical now, but again, it's all about the financing. I mean, I saw the other day, I'm looking for another vehicle and, you see all the specials they're offering and, I mean, you can get 84 months now, zero interest for 84 months. So they can charge $70,000 or $80,000 for an SUV that should be 50 grand. I mean, I've always driven Suburbans. I love a Suburban. Those stupid things are $80,000 now. The last one I bought, I paid 60,000 for. So it's just crazy. So is that inflation? I mean, literally, I've got a 2016 Suburban. I paid 60 grand for it in 2016, brand new, and 100,000 miles just after the warranty. Of 100,000 miles. It was 105. The transmission went out, had to replace that. Now I've got a blown engine,
Yeah.
So I've only have 150,000 miles on it. It's a great vehicle. I love it. So now I'm looking at an engine replacement. So anyways,
time to go.
I've been looking at vehicles, right?
Yeah.
So, and now it's like, just that alone is unbelievable. Gas is going up, food's gone up. Mm-hmm. A lot of it is pandemic induced, but some of it is just, flat out inflationary environment, but it's mostly the supply side versus demand. So it's not necessarily that we have an increased demand, it's the supply side can't keep up and there's a backlog. Now where your demand is causing, massive inflation is on the, the housing market, construction, anything like that. There's huge demand. Supply chain is constrained in a lot of areas. So prices are spiking there, but at the retail consumer level, we still don't have a ton of it yet because people don't have that money in their pocket yet. And, when these stimulus checks come out, things like that, you might see a little spike in some things, but, when you poll people on what they're doing with their stimulus checks, probably, 30-40% is going to put it in the bank, 30-40% might use it to catch up with their bills. There's another group that might put it in the stock market, gamble it. And then, a bunch of people are going to buy lottery tickets, which is interesting. But the last round of stimulus checks, I go to a couple of convenience stores regularly to get my Diet Coke fix. And, I talked to the cashiers in there and back around the last couple of stimulus checks, they told me that people were just spending their entire stimulus check on lottery tickets.
Oh, that is frightening. That is frightening. So yeah, inflation is one of those things that you have to be, like you said, you have to kind of peel it back. Cause again, the media is going to talk about it. They're always trying to scare us. I think the media, as I've learned on YouTube, if you want to get a lot of views, go negative. So the media is going to try to scare people with inflation. I like how you broke it down. Without question, we've had asset inflation, both real estate, stocks. And I think at least in the stock market, if the 10-year note continues to rise, right, it went from under 1% January 1st to now touching 1.6. So not the move itself may seem small, but on a percentage basis, that's like an 80% move.
Yeah, didn't it hit 2 on Friday? One issuance of the 10-year note, or was it?
Well, 1.62 is the high print on Friday.
Okay.
People are talking about 2. That's the new thing. People look at the channel, right? They look at all these, daily candles and all of that. And they're going, oh my God, the next resistance is 2%. So that's where you may have seen it. That was definitely a talk on Friday and Saturday, kind of financial news. channels. Um, but where I was going with that is I think the stock market is about to have the wind taken out. We're going to see a lot on Wednesday when the Fed talks Jerome Powell. But yeah, I think if interest rates are rising, that's going to cause the rotation out of the, the big six tech stocks, the Teslas, Amazons of the world, into growth.
Yeah.
Because I do think there's a lot more money coming. I think the job picture is about to get better. I see demand picking up. So yes, we do have supply chain issues without question, right? It's still not just in time. Manufacturing has seen a lot of issues, right? Both in manufacturing of cars and computers, all these chips are not there. It's crazy. I'm more nervous about consumer inflation coming or spiking quickly, because I already see it in food and gas, right? Which we all use. I see it in rent, right? When I have a vacancy, I raise rent a lot the last 4 or 5 months because demand is there. If we continue to see asset inflation in homes, that's going to take buyers out of the picture and make more renters, as you know. So I'm a little bit more nervous about inflation becoming a foothold. I agree there's a supply chain issues. And frankly, Janet Yellen agrees with you. She's now out saying that, yep, you know what? Prices are going to go up because of stimulus, but she's saying it'll be short-term supply chain issues. I don't know.
You get a little bump because people are going to go out and spend some money and stimulate. And then once we open the economy back up, there'll be a little surge, cabin fever. Everybody's going to get out and go back to restaurants and movies and, this, that, and the other, assuming there are good movies released. But at the end of the day, it's really interesting. So gas prices went well below normal levels. We're basically back to a normal price point. I don't know what the national average is, but in our area, it's much cheaper than yours. I mean, for us, $3 a gallon is the price point threshold. So we're used to seeing it in the twos, mid twos, just up to about the $3 for regular gasoline level. I think national average might be more than that because of the West Coast and other areas where it's more expensive. But that's what's normal for us. And we haven't seen $3 gas yet. And I don't know that we will, but 5 years ago, 6 years ago, gas was $4 in my area. So we've seen much higher gas prices.
Sure.
We've seen much higher food prices. We've seen, much higher prices in other areas. It contracted than it, it's kind of, it's a commodity. So it's up and down. So, that's interesting. It'll be interesting to see what happens at the pumps. And when gas does start hitting a certain threshold, the economy contracts. Okay. And you start flirting with recessionary, potential. So it kind of seems to balance itself out. The oil industry only pushes those price points so far. Rents are another thing. And this is what I advise all my clients when you're looking at rent increases. Whenever you have a vacancy, and you have people come in, keep quoting a higher rent till you get pushback. That's how you know when you've reached market. You can look at your comparables, but at the end of the day, if you've got the only place in town, you can push it to a point, but you're only going to push it to a point. Same thing with housing. Okay. You're getting ready to sell your grandmother's house you're telling me about. I just helped my mom sell her house. There is a point that people will go to and they won't go beyond it.
Yeah.
So even with the interest rates where they're at, even with, the liquidity that's out there, the only place where there is no stopping point is in the financial assets. Those are going to stupid numbers that make zero sense where there is no threshold. There's even a FOMO ETF coming out.
Yeah.
For people that feel like they're missing out on the stock market. But when it comes to housing, there's multiple offers on properties, but they only go so high. People stop bidding at a point. Same thing with fuel. It'll get to a point where people will push back and they won't pay. Mortgage rates, people, you get over 3% now and you get close to 4%, done. If you get near 4%, housing market's done. People will push back and they won't buy because they think, do you need to be in the twos? They're all conditioned. Just like gas prices, just like other things. Where the sneaky inflation is at the food level, because you got to have food. Clothing, you got to have clothing, but there's always deals there. Movie theaters, they started getting pushed back on movie theater tickets and had to change their business model, things like that. So it's really interesting in terms of where we're at and where we can go. And the really interesting thing is we should have been in an inflationary period since 2008 and 9 with all of the stimulus, all of the quantitative easing, all of the fiscal policy, our MMT experiment that we've kind of sort of been in since 2008 and 9. with the printing press, but the only place you're seeing inflation that we should be seeing everywhere is at the asset level, because again, the money's not going into the right hands to create real inflation at the consumer level.
Mm. So if I were to break down our discussion the last 10 minutes, you are, I guess I'll say it this way, you're not overly concerned about inflation rising above, say, 2.5%, 3% in the near term.
No, because the buyer creates the rules. So if prices
Okay.
get out of control, people will stop buying, they'll come back down.
Yeah, they'll trade down, right? The whole marginal utility of
Everything.
everything.
Yeah,
Okay.
except financial assets. That's the only area where all bets are off. People do stupid things because it's all speculation. But at the consumer level, where
Okay.
real inflation lives,
Yep.
people will push back and stop spending.
All right. Now, when you're out looking at deals today, has anything changed in your evaluation? Because maybe the cost of capital might change in the short term, or anything like that. Has it changed at all because of what might be around the corner with inflation and higher rates?
So if I've got a deal that's short term that I can get in and out of, I will pay more now than I would have a year ago because the
Okay.
market is so hot.
All right.
So if it's a short term in and out play, there's so much demand out there for, and this is at every level. This is commercial, multifamily, housing, land. You can speculate, but you got to really know your market. You got to really know what you're doing, and you got to be able to handle being wrong. So whereas before I've always been a value investor, I've always had my formula, and I'm opportunistic, but now, just to have a little fun, I'll dip my toe in on something and pay a little more than I normally would because I know I can get out of it tomorrow at more. My mom's house was a classic example. We had one offer that was a loan contingency,
Mm-hmm.
and the realtor was worried about the appraisal, but it was $25,000 more than a cash offer.
Mm.
Okay. And I said, take the loan deal. I'm not worried about appraisal. I said, if she wants a cash offer, I'll buy it and I'll sell it to him.
There you go. I'll take the extra 25 grand. No problem.
Exactly. I'm like, I'm not worried about it.
Oh, that's hilarious. Very, very cool, Matt. And just so people know, when you think short-term in and out, you're less than 9 months.
I'm
Less
talking
than 6?
3 to 6 months
Okay,
right now,
less than
because
6.
with treasury yields going up
Mm-hmm.
and with rates going up, this market can turn on a dime.
Okay.
So,
Glad I asked.
you got to be able to get in and out and, quickly and be nimble. Right now, I'd really like to, and I'm talking about short-term flip plays,
Yeah.
that you can knock out in about 90 days or something.
For sure.
We're treading thin water right now with rates.
Yeah, I totally agree. I just locked up a quick flip. Hope to be out in 3 or 4 months for that reason. It's like, yeah, the market's hot. Let's go. So makes total sense. Well, Greg, any closing thoughts on this? I think you nailed it.
No, I think that's it. Just keep an eye on rates, keep an eye on, demand and supply chains out there, and understand where real inflation lives at the consumer level. So once the cash starts flowing into people's hands, they'll be a little free with it. But once it stops, all bets are off.
Very cool, man. Thank you very much.